Hey guys, welcome to another episode of Strategic Investments Analysis, where I give out information about the newest stock that I feel like is going to boom in the market. And without further ado, we got a special one. This episode, are you guys excited? Are you guys excited? I know I am. So let's hop on into it right now. So the cloud. A lot of you might just be thinking about, like, what is the cloud? What is that? Okay, so in simplest terms, the cloud describes servers accessed over the internet. Okay, so cloud servers are located in the data centers all over the world, with cloud computing users and companies worldwide, and they don't have to manage the physical servers or run software applications on their own machines. So that's the value of it. For consumers, this means that you can expect more photos, you can expect more videos, and more music on your storage space. Okay. It also means you can access them on multiple devices. Okay, so in the new work from home era, the cloud is essential for employees and customers to access the same files and applications anywhere in the world. Think of these clouds like a central depository of the world's information. That's what it is, a storage space for the world, for information. Okay, so in 2015, approximately 25% of the world's data was in the cloud. By 2025, cybersecurity ventures estimated that the cloud number would reach 50%. So just as there are, different clouds in the sky, there are absolutely different types of cloud computing. So infrastructure as a service, this is one type that is highly seizable and automated computing for resources. The next one is platform as a service. These vendors provide cloud components to certain software used mainly for applications. Okay, so these programs are what most of the apps on your phone are built on. So the software as a service, this is the most commonly used option for businesses. Okay, and yeah, that's all of them. So regardless of the theme, that remains the same. With China's size and its rebounding economy, the opportunity in cloud computing could give us about 150% gains in the next few years, if it does what it's supposed to do, which the information backs it up. And I will continue to give you information to why it does back it up. But China has like 1 billion people, right? And they're already servicing China right now. Okay, so I don't know if y'all know it or not, but if I spot a big tech trend in America, it's almost a guarantee that it's going to exist in China. Just a few examples of industries that are both in the U.S. and in China is Uber, ride sharing services like Uber, um, e-commerce. Amazon and Walmart deliver just about anything right to your doorstep. In China, it's Alibaba and JD.com. Okay, and let me rephrase what I said earlier about Uber. Uber is actually just in the United States. China has a subsidiary of Uber. It's like Uber. It's Didi Chang. Okay, so in social media, Facebook and Instagram dominate the internet in the U.S. And in China, it's the opposite. It's TikTok and WeChat. So it's no wonder that China operates its own cloud companies to compete with the offerings from the US. Mega caps such as Amazon, Microsoft, and Google globally, and the cloud computing market will double. Okay, so just to give you a range on that number, it's expected to double between 371 billion to 832 billion between 2020 and 2023. Okay, so China's public cloud market is set to grow even faster, as Bloomberg expects it to almost triple in the next 3 years from 21.7 billion to 60.1 billion. That's an astounding 40% compound annual growth rate between 2020 and 2023. Okay, so that brings me to this episode's stock. Okay, so this episode's stock is Kingsoft Cloud Holdings. All right, so Kingsoft is a subsidiary of Kingsoft Corporations. It's actually a Beijing-based company founded 32 years ago. So right now, currently, Kingsoft Cloud is the largest independent cloud service provider in China. Yes, in China, it's the largest. It's also the fourth largest infrastructure as a service and platform provider in China, trailing only Alibaba, Tencent, and one other one, if I'm not mistaken, one other one. Okay. So the tipping point right now, the first part of the 4-step strategy that I do every episode is that the work from home movement has created a tipping point in the cloud computing. This is especially apparent in China, where the public cloud market is expected to almost triple in the next 3 years. As an independent cloud service provider, Kingsoft Cloud is in a unique position right now to capitalize on this shift. The X factor currently is that only 12% of Kingsoft's revenues come from its enterprise cloud services division. However, this division will rise to 49% of revenue by 2024. This should boost earnings, as revenue from enterprise cloud has higher margins than the public cloud business. So the momentum is that quarterly revenue increased 64% over the past year, with private cloud revenue surging 259% over the past year. So the ideal timing is that Kingsoft Cloud's stock pulled back on the second quarter earnings, and shares are actually more attractive now at 11 times its revenue. So what I'm saying is that for right now, you can get Kingsoft Cloud for a pretty low price. But the company, for what the company is worth, you can get it at a great price right now. I believe it's like $2 and some change. But the expectations of where the company is going to grow is way higher than where the stock value is right now. So moving on, since the video aspect is a major use of the case of Kingsoft CDN business, JP Morgan sees the company as well positioned to benefit from the growth of Chinese video streaming, which is expected to grow, by the way, at 143% in the next 5 years. Okay, so as I noted before, 12% of Kingsoft's revenues currently come from its private cloud service divisions. While private cloud services are still only a small percentage of total revenue, they're expected to skyrocket, over the next few years, making up 49% of its revenue by 2024. So only 12% of Kingsoft's revenue comes from private cloud services, but that number is expected to grow to 49% just in that one area. Okay, so that's actually a great sign. So Cloud was actually went public in the market in May 2020. The company raised $500 million in its initial public offering. The pricing was at 30 million American depository shares at $17 a piece. So there was a significant institutional demand at KC's, which sold 5 million more shares than it was expecting. The company's valuation has doubled since its IPO was at $7 billion, but there are still considerate room right now for the stock to grow even higher. That's because the shares are still cheap, and when the shares are cheap and when it's a lot of noise going on about a certain stock, it becomes really attractive. Okay, so that's why the potential is so high right now. Okay, so winding down, the buy zone. What's good to buy is I need to post these up, but anywho, the buy zone right now would be $29 is cheap, less cheap is $33, the middle price is $37, expensive is $40, and very expensive is $44.40. Okay, so that was at the time of this. So anyways, right now the stock is considerably way cheaper. It's like $2. So why not, guys? Y'all have nothing to lose. $2. I've given you all the information on why the stock is going to make a dramatic move in the market, whether it's a few months, next year, the year after. Just make sure you make a decision that's realistic, and just look into it, guys. I'm just here to provide you with the information. Y'all actually got to go out and do the investing, and in turn it will help you out. It will definitely help your pockets out. Okay, because we were just taught differently. We weren't taught about stocks growing up. We had to learn ourselves. So stocks are like the number one way to create wealth. And if you educate yourself, or if you listen to someone who has educated themselves in the market, you can be well off financially, because of the power, the financial power that the stock market has.